Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Now, Dave, look, there's a lot for us to talk about again in the precious metals sector. I first want to start off with some of the moves in the gold price. Look, gold has gone up or went up almost, I think, $300 in just a matter of a couple months, but there was some crazy action on Sunday night, early Monday morning when markets opened up. The gold price on the futures exchange spiked up over $2,100, and it did not hold there for long as it then kind of reversed almost $100 lower to a level that we're seeing more right now around that 2030, 2040 level. Look, the gold price is still doing well. We'll even get into how some of the stocks traded around this, but overall, Dave, what was your takeaway from that volatile move that we saw Sunday night and into Monday morning?
Yeah, it was interesting, Corey. I told my subscribers to look out for a huge move because of what was going on at the end of the week. Last week, you had the gold price break out and close at an all-time monthly, weekly, and daily high. So Sunday night when the market opened in Asia, but simultaneously when it opened, you had an attack on a U.S. warship in the Persian Gulf. So that pretty much was the spark that lit the gold price to climb up to 2150. It opened up like $40 higher, and it didn't hold there very long. It reversed pretty quickly, and by the time the COMEX opened on Monday, I mean the gold price had closed 4 days above its upper Bollinger Band in a row. So we were expecting to have some sort of reversal on Monday, but it took place on Sunday night from a much higher level than I expected. And you had $100 reversal in the gold price. So it got up to 2150 overnight. And then by the time it closed on Monday on the COMEX, it closed at 2042. And now it's traded back down to 2020, which is where the short covering move began. As soon as gold got over 2020, a week or so ago, we had that short covering move. But what impressed me the most was the reaction by the juniors. Most of them just yawned at the move. I mean, you had a reversal of $100, and yet many of the stocks in my portfolio and the ones that I follow didn't sell off much, and some of them were actually up on the day. So that was really impressive to see, because I think it's basically a lot of these stocks are sold out. I mean, they've been selling off for the past few years, and the tax loss selling was the final straw for a lot of these stocks that were beaten down to just ridiculous undervaluation. And then you've got a gold breakout, and some of these companies went up 30-40%. And to hold those gains on $100 reversal was pretty impressive in the gold price.
Well, Dave, despite some of the mining stocks yawning to start the week, I think the sentiment with some junior resource stock investors was also yawning. I was interested to see what the sentiment was on different forums and chat boards. And I visited a number of them at the end of last week when we were seeing that breakout in gold, when we had the highest monthly close ever on Thursday, followed by the highest weekly and daily on Friday. People were getting excited. The stocks were moving. We had noted before this call, we saw optionality plays with ounces in the ground that aren't anywhere close to going into production, but they were moving up double digits. It was pretty exciting. And then people ended the week on a euphoric high, only to see how things open on Sunday, and people got even more excited. Holy cow, we're at liftoff, only for it to reverse. And then all the comments started flooding in everywhere. I knew it. They were going to get hammered down. Oh, here comes hammer time. Oh, wow, I knew it was going to get reversed. We can't ever have a run in the sector. What do you make of the abrupt change in sentiment in just several days from investors? Do you get comments like that from some of your subscribers, or what's your take on the sentiment in the space right now?
Yeah, I mean, they're just used to being whipsawed so many times. I mean, look how many times the gold price failed at 2000, countless times. So they're just used to being whipsawed out of their gains. I think it's just frustration. But like I said, I mean, a lot of those gains were held in many of those stocks. And even today, they come off a little more, but still, those gains are still holding. But yeah, I mean, if you look at the GDXJ, it closed 5 days above its parabolically rising upper daily Bollinger Band, and that's that's an algorithm that's designed to keep the price within the bands 95% of the time. So 5 times above the Bollinger Band, I mean, you expect a correction, and you expect a pretty sharp one because it went up so far so fast. But like I said, the correction wasn't sharp in the mining sector, only in the gold sector. So I think it's a combination of a lot of these stocks being sold out for tax loss, and some bargain buyers coming in and seeing the bargains on these stocks that they probably even sold earlier for tax loss and waiting for a better time to get in after a month, because you have to wait a month to get back into the stocks to claim a tax loss on it. So a lot of this buying is investors buying them back. They ended up getting in a bit too soon on a lot of these stocks. They sold them for tax loss earlier because let's face it, the tax loss selling began in May, June, the last 2 years. So a lot of these people have been waiting for better entries on companies they sold for tax loss a lot earlier.
So, Dave, the fact of the matter still is with a lot of these juniors, it is still us trading amongst ourselves. So I do want to look at some of the bigger boys and also the ETFs, because GDX, very interesting trading as it dropped down today right to that 200-day moving average and right to that level of around 30 on the chart that was pretty strong resistance going back through the end of August. It has since bounced today. It's been very high volume yesterday, and today looks like it will be high volume as well. From just a technical standpoint on the GDX, look, we all know we need an uptrend to draw in more investors. What are the keys that you're watching on this chart?
Yeah, that's what I've been watching, is that 30 level, because I was watching it for a long time with it being stiff resistance for so long, and the level on the GDXJ was 36. So it's 30 on the GDX and 36 on the GDXJ, and both are hammering from those levels from earlier today. But you also, if you're looking at short-term technicals, there's open daily gaps in both of those ETFs as well. So even though we've had a neckline breakout on convincing volume, the volume spike on the sell-off yesterday was a lot higher. Well, not a lot higher, but just a little higher than the previous spikes that were buying spikes before. So there's more support at 29.50 on the GDX. And the GDXJ, it was leading the move higher. It has only come down to test 37. It hasn't come down to test 36 yet. So that's encouraging, seeing the GDX leading on the breakout. Yeah, I mean, we could still see some more selling. I mean, we've still got another few weeks left before the end of the year. And as I pointed out, I think I pointed it out in last week's show. It's interesting. We had the very last trading session of the year ends on a Friday. So you're going to have a weekly, a monthly, a quarterly, and a yearly close on December 29th. If gold futures can close above 2,100 on that day, then that would be a major signal for a breakout. Because we've already had a monthly high close well above 2,000, but if we get that 2,100 close on a quarterly, yearly, monthly basis at the end of the year, that would signal a lot of momentum traders coming in, and fund managers and generalists I would expect to come in, because you're going to see some massive headlines on that. So that'll be interesting to see if that plays out. But I think that'll be led by the miners. The miners will tell you if that's going to happen. Really would not want to see the miners get too far below 30 on the GDX and 36 on the GDXJ with good volume on the downside. I would not like to see that. So I'd like to see this bounce, from 30 and 36 hold and get some volume coming in and get some buying coming in. But of course, that's going to come down to where the gold price is going to end up bottoming. I mean, there's support there at 2020 where the short covering started. There's a little more support at 2010, and of course, the stronger support is at 2000, which was resistance for 13 years, and now it's trying to become support.
Yeah, Dave, it's going to be interesting to see how the year wraps up on that Friday, because as you say, it's going to be a convergence of all the charts on one day there on the 29th. But in addition to possibly some more generalists getting interested in the big boys, the majors over the last week or two, and GDX, where they would normally position, and in addition to junior resource investors trading amongst themselves in the junior stocks, maybe buying back in after selling for tax loss and then repositioning. The companies themselves are also jostling for position and starting to acquire each other. We haven't had a ton of M&A in the sector other than the big news from Newmont combining with Newcrest. But we did see things kick off with the Caliber Marathon deal, which we've talked with you about in the past. But in the last 2 weeks, we've seen a flurry of other deals. We saw a bidding war. Well, it could be a potential bidding war starting with Silvercorp and OreCorp, where Perseus has now come in, taken a 20% stake, and said they're going to vote no on the combination of Silvercorp with OreCorp. So there you have two producers possibly vying over a development project. You had Luminex and Adventus combining for a copper gold company. And then you also have the combination of two development stage companies, Nighthawk Gold and Moneta Gold, two developers trying to make a 1 + 1 = 3 scenario. And even today, we saw Vanstar acquired by IM Gold. So we've had a string of M&A deals. Haven't gotten your feedback on how you're seeing the climate here with the M&A heating back up in the sector.
Yeah, that is nice to see. And I've been following this as well. And especially the one today, the Vanstar announcement, that's actually not a take under. If you were fortunate enough to bottom fish this stock over the past couple of years, you got at least a double on this announcement. So that's nice to see. As far as the Moneta Nighthawk merger, that is good for the sector. You know, we talked about this before. I'd like to see a lot of these companies merge together, you know, have a bunch of money in the bank and maybe get a big board listing. Well, as far as Moneta and Nighthawk is concerned, these are both very high capex projects. And, you know, Nighthawks is an Arctic project. It's farther along. I think it's at the feasibility stage. And Moneta, unfortunately, they're still at the pre-feasibility stage, but they're also restructuring the project while at the same time they were restructuring management. So I think their project is, you know, it's got a big question mark on it. And plus, I don't see either management team, Moneta not really having a management team, having a solid management team now, and Nighthawk not really having a management team that has all that much access to capital that I could see. I would like to see them maybe merge with another company that has all those things. You know, they have a more cash, better access to capital, maybe a big board listing. Because when we saw in the past, I think it was earlier this year when we saw Integra and Millennial merge. They're both in the Great Basin, and Integra has that big board listing. Their management team does have access to capital. So I think that one made a lot more sense. But this M&A, seeing more M&A is good. It's very positive for the sector, and I'd like to see a lot more of it.
So, Dave, are you investing at all around any of this M&A? Does any of it attract you to take a position?
No, not in any of these companies. As a matter of fact, I sold Moneta for tax loss earlier in the year. None of these really excite me very much, but I'm hoping to see one that does. Pretty soon, because like I said, I think this is going to spark more M&A in the sector because it really needs to happen. It's going to be interesting to see now that the gold price has broken out, and if the breakout holds and it doesn't turn out to be a false breakout, then I think the capital markets will start to open up again, and it'll be interesting to see how far down the food chain these capital markets open up. Meaning, are they going to open up for these earlier stage grassroots companies that are desperate for capital? So I'm looking forward to see how the capital markets react to in the future here once it looks like the gold breakout is going to hold and it's going to continue higher.
Well, Dave, just to follow up on the M&A and whether it excites you or not, or how you position in your portfolio for it, a lot of people, when they're looking at a project, often tout, whether it's the management team or investors or newsletter writers, they often tout, hey, this company could be a prime takeover candidate. In fact, you hear it about hundreds and hundreds of stocks every year. Hey, this company could be a prime takeover candidate. For you personally, when you're looking at your portfolio, what kind of things do you consider that actually would be criteria that would make a company a prime takeover candidate? Because often the candidates we actually see get taken over are not the ones most people have their eyeballs on. So what to you makes a company a good takeover candidate?
Well, there's a few things. The first thing is the project that they're de-risking. Do they already have a mining permit? B, do they have a timeline to obtain that permit? Because you're starting to see now a lot of these companies, they're being more vocal about, hey, were starting the permitting process because they want to get that out there because they know that there's two types of projects, right? There's a mining project that is still a mining project, and then there's a mining project that already has a mining permit. Those are two totally different animals, and the permit is a big selling point. So they want to at least show that they have a timeline to a permit. They've laid the groundwork. They've already submitted, their environmental permit, or they've already gotten it, or they're getting close to it. That's what these mining companies want to see. And they don't want to see a big royalty on the project either. The company also that's de-risking it, they need to control it 100%. And it also needs to be pretty far along, either at the finance stage or the company even has the financing for the project or having started to build it already. That's what these mining companies want to see. They want to see all the dirty work done already, where they can just come in and they don't have to do too much on the permitting end, and it's already at the finance stage, or it's already got a definitive feasibility study that makes sense.
How do you hold when a company gets to that stage? Because quite frankly, a lot of that work, the permitting, even the economics, even the financing takes a long time. And we all know the Lassonde curve, that's usually when a stock is actually dropping. So how do you balance out watching a company continue to de-risk a project, but usually not get a whole lot of love from the market, and then still think, well, it's going to be a takeover candidate, so I should keep holding?
Yeah, I mean, you just have to have a lot of patience. I've got several companies like this that I've just patiently held them and patiently accumulated more because I'm very confident in the project. I'm confident in the management team. There's one that I'm holding. They put out a definitive feasibility study. It's very close to being shovel ready. So they're already looking for financing. There's a couple of companies that I have like this. So that's also what you want to look at as far as these companies bottoming, these stocks bottoming, and the sector bottoming is when you see financing announcements, what is the market's reaction to the financing announcement? In bear markets, the reaction to a financing announcement is the stock's going to get sold. And what I've seen lately, there's a junior that I hold that announced a financing. The market yawned at the financing. The stock actually went up a couple pennies. And then a week or so later, they announced a doubling of it because of the interest was they attracted a lot of interest, so they doubled it. And as soon as they announced the doubling of the finance, the stock really started to move higher. So this is dilution being bought. You want to see dilution being bought in these juniors. That's when you know we're on the right track to the sector bottoming.
Well, Dave, just one more on this M&A theme, and that is a lot of people position in companies that they think are either adjacent to a major mining project, even if that
area plays,
right? Area plays where they're basically positioning next to the big boy, hoping that they'll grab their project, or some of people will position based on strategic stakes that majors have taken. Maybe they've taken a 10% or a 20% stake. What's your take on that philosophy as far as positioning in front of M&A with the majors either nearby or with a stake?
Yeah, I mean, that's always a positive sign. If you see a major that has a 9.9% or a 19.9% ownership in the company, that is legitimizing the project. But I think we talked about this in last week. This is chump change for a lot of these companies, a lot of these majors. It's not a lot of money to take a little stake. So just because they've taken a little stake doesn't mean they're about to take it over. That does raise the odds that it will eventually get taken over. So absolutely, I put it on my radar, put it on a watch list, and the stock does become more attractive, and I might look for an entry point on it if I'm at the point where I've sold something and now I have cash and I'm ready to buy something else, because I have a watch list of 20 companies that I'm constantly watching and waiting for an opportunity to maybe take a position if I end up having to sell something that has gotten overvalued, or if the company gets bought out and I want to sell it and I'm looking to put the money to work in something else.
All right, Dave, we'll wrap it up here. Thank you for this broad discussion on what's been going on in the resource sector. There's a lot more positive news, especially just in the last few weeks coming out of the sector. Just need to carry that momentum through the rest of this year and, more importantly, into 2024. Dave, thank you very much for your time. We'll try to chat with you next week. I hope you have a great rest of your week.
You too, guys. Look forward to it.